Welcome to the first official trading course of Forex Tester Online, where we're going to cover from the most basic to how to build a strategy and understand its analytics. It's giveaway time, and not only one giveaway, we are giving out 42 accounts of free Forex Tester Online accounts, so you can use Forex Tester Online completely free for everybody that enters the giveaway on this free trading course. And the conditions are really simple. Let's check them through. Basically, we need to subscribe to the channel and leave a comment under the video to enter. So basically there's 6 videos, so there's 6 entries that you can get. You could win a lifetime license basically for all your life, or basically or 1 year subscription or 1 month subscription. Each video is going to have 1 lifetime, 1 year subscription and 5 monthly subscriptions. So basically in total there's 42 giveaways that you can enter, and basically you can comment on every single video of this trading course, so it's excellent. Each video of this course will have its own giveaway, as I mentioned, and you need to comment under to basically have a chance. On top of that, if you comment with different comments, especially comments that features that you like Forex Tester Online or why you want Forex Tester Online, please comment down below. And basically if you have more than 1 comment, then you have more than 1 chance to win this giveaway. As well, really important, we need to register for a free account in Forex Tester Online. And to do this is really simple. Basically we only need to come down here where we can see our plans, and here we come to free demo, and we just need to enter with our Google account, Microsoft account, or just register with a normal email. And this is obviously is important so you can enter this giveaway. And at last but not least, really important, you need to have an email on your YouTube profile. It can be any email, it doesn't need to be your personal email or anything like that, but preferably the email that you've actually used to register for this free demo, because this email is the one that we're going to use to be able to contact you. So to resume everything, what we need to do is basically subscribe to the channel, like the video, comment the video why you want Forex Tester Online, and register for this free account that I've just showed you at the moment. And this way you'll be entering in this giveaway. Obviously you can have all this information down in the description so you don't have any doubts at all. And we are going to finish this giveaway on September the 6th. And the draw time, basically we're going to do a massive live stream here on our channel on the September the 9th, where I'm going to announce all these winners. And like I said, really important, if you don't have a public email on your YouTube channel, we can't reach out to you. So please, if you are a winner, we have 7 days, or in this case, you have 7 days to put your email on your YouTube profile as a contact method, so we can reach out to you and give you your free account. So good luck to everyone, and let's continue with the video. And obviously, I want to start first of all with what is trading, because a lot of people don't actually, doesn't know what trading is, and this is the first video that they actually see about it. So obviously trading is basically exchanging one asset for another, looking for a monetary benefit. And obviously we can do this in different markets, in different conditions, because we could even do trading exchanging one phone, okay, an iPhone for 500 euros. So that is basically called trading as well. But in this case, we're going to be trading in the markets. And to understand this, obviously we need to first understand that they are different markets. We have the stocks, we have crypto, we have futures, we have Forex, and all trade in a different way. What we're going to learn in this trading course, we can use it virtually in any market, okay? Because we're going to go basically on the actual fundamentals of what make you profitable in the market, and this works for any market out there. But in this case, what we are going to focusing more is in the Forex market, and then we can have some touches on the futures market, on cryptos market, that will explain everything right now. But first of all, what is the stock market? The stock market is basically where we can buy stocks, we can buy shares of a company, okay? And if we do it in a trading way, like we'll be trading futures, then that obviously is different, because if we just trade traditional stocks, and basically we're just going to be buying the stock and holding for the price to go higher and then sell it for a benefit. Meanwhile, if we actually trading it in terms of futures, then we are going to be buying or selling the stocks based on contracts. Okay, this is the main difference. If we trade stocks traditionally, we can just buy them. If we trade them in futures, we can buy and sell them, even if we don't have these stocks, because it's like if they borrow us the stocks to actually sell them. And then obviously we have crypto that works in a really similar way. We have the normal spot. Okay, this is just buying the crypto. It's the same as buying a stock, and we hold it until we get a benefit or we get a loss. And then we've got the actual crypto futures. Now these are basically exactly the same as the futures that we have from the Nasdaq, from the S&P 500, and all these, where basically we can buy and sell these crypto actives. And then we have the Forex market. This can be like the euro, the pound, the yen, and all that. And this trading course is going to be mostly focused on Forex trading, but what you're going to learn in this trading course basically is you can use it for any market out there. So now we know this, what we need to understand is how the markets work, because it's different in futures, in crypto, in Forex, and in basically just buying and selling stocks. In the Forex market, basically it works between the difference from one currency to the other. And this is based on the index of each currency. And the best way to actually explain how the Forex market works is basically, you can see right here is the US dollar index, and this basically what it means is the value of the dollar. Okay, and this is going to go against a different currency. In this case, you can see the euro against the dollar. Okay, and this is basically, this turns into this when you match it with the euro index. As you can see, if the actual asset starts with the euro, then basically what it means is that the euro is, we're going to see the euro chart against the dollar chart. If we see the dollar first, then it's going to be the dollar against the other currency. And as you can see here, but it's basically the opposite, because obviously the dollar obviously is first because it's only the dollar index, and here is the euro against dollar. So it's showing me the euro chart, but against the actual dollar, and this is where the changes happen. But as you can see here, this big push here on the downside on the dollar is always going to be an up push on the euro against the dollar, because basically it's devaluating the index, so it's pushing the euro high. This is how basically the market works in terms of Forex, because at the end of the day, if one currency goes down, it's going to push the other currency up. It doesn't mean it makes the euro stronger, it just makes the euro have more value against the dollar. So this is the main explanation on how the Forex market works. And in this case, what we mostly are trading when we trade Forex are CFDs, that is contracts for difference. And this allows us to buy and sell in the market. So if we can see the actual market being in a downtrend or in an uptrend, we can buy. It's more or less just so you can have a really simple idea. Obviously it's not the same, but so you can have a simple idea, it's like betting. So I say, I bet the market is going to go higher, and if I'm right, I make money. And I can bet the market to go lower, then basically I make money too. And this is the main difference between the Forex market and stocks market, where stocks we can only buy, and in Forex we can buy and we can sell. So this is basically the main difference. And obviously if we come to them to actually look at the assets, we have a lot of assets that we can trade in terms of CFDs and Forex. We have the FX majors, where we've got the AUD against the USD, the euro against the dollar, the pound against the dollar, the New Zealand against the dollar, the United States dollar against the Canadian dollar. And as well, what we can find is the FX crosses, where we have all type of different crosses between one currency and the other. And these basically, we are going to select one or two currencies based on how we want to trade, that we're going to see obviously in the future of the course. But so you understand, we're not going to trade all the assets that we can find. We're going to pick one or two that we actually can trade based on the rules that we're going to identify further in the course. But this is the importance of why we need to backtest every trading strategy, everything that we use, because obviously every currency moves in a different way at different hours. And if we don't backtest this, then obviously we are not going to understand what's happening. Because obviously based on this, on what currency we're going to pick as well, we're going to basically going to be trading on a different time. And for this, we need to understand what times are the best to trade, because basically the market divides into the London session, where basically London opens, the actual exchange of London opens, and that's where all the trades, big volume trades, come in. Then we have the New York, where basically is exactly the same as the London, but it happens in New York and it happens at a different time. And then we have the Asian time, where there's not so much volume, but if you actually live in Asia or whatever, it's still a trading session that you can do. And to see this, it's as simple as if we come to indicators in Forex Tester Online, we can find sessions. Okay, and here basically we have the sessions of the Asian, the London, and the New York. In this case, if I'm trading in London, the London session is going to start at 8 o'clock in the morning. Meanwhile, the New York session starts at 1 o'clock London time zone. Then the Asian session normally starts at 12 o'clock at night if you live in London. If you live in any other place, you just have to look for the conversion. But basically, these are the times that they start and they finish more or less, and they finish at this time here where it says close. Let's say the Asian closes at 9 o'clock, the London session closes at 5 o'clock, and the New York session closes at 10 o'clock, all based on London time zone. And if we apply them, basically, we can see them on the chart, and this is a way of identifying the trend as well, because based on how the sessions have been performed, you can actually see some type of trends. Obviously, we're going to cover all this in the future of this course, but as you can see, we've had an uptrend in all this day, and it followed by a next uptrend, and it followed up by a next uptrend. And there's different ways of looking for our edge in the market, so we can actually predict, because obviously we're not always going to predict the precise way, but we can predict on how the next move of the market is going to happen. And to finish off this first part, what I want you to understand as well is that when we are trading, especially in CFDs, we have what's called the bid and the ask and the spread. So if we come close, we'll be able to see what the bid and the ask is, and it's these lines here. Basically, the bid price is going to be the highest price a buyer will pay until it sits under the ask. So in this case, if I were to buy here, my order will be opened up here. Okay, so once I open, I'm going to be instantly in drawdown. And then obviously the ask is the lowest price a seller will take until it sits above the bid. In this case, we can't see it here because it's going up, and this is the real price. And what we call when we say spread is basically the difference between the bid, that is this one up here, and the actual price of the market. So in this case, I've opened it up so you can see it better, but in this case, we can see 11 pips of spread. This isn't the real spread. I've opened it myself so you can actually identify the lines correctly. Normally the spread is a lot more shorter. More normally in the euro dollar, if we've got a good account, we'll be looking at zero spread most of the times, because we actually pay commissions when we open a trade. Let's say most of the times the standard is we pay $6 for one lot size. Obviously, we're going to understand what lot size is in the future videos, but basically we are going to pay commissions to not have a spread. Then we have other different types of accounts where this commission is included inside the spread, so we don't have to pay it. And the spread is basically the way that the broker makes money, because obviously it takes a small commission inside of the spread on every trade you take. And now we finish this first entry of what trading is, what the markets are, how to trade them, how they work. Now we need to know basically what technical analysis is, because technical analysis is the door that we need to open to actually enter the markets, to understand what the markets are doing. And this is going to be the next video, so don't miss it out.